Hey, it's Clay, and I want to talk about a day trader's tool to make easy money, margin, and leverage. Very, very powerful tools. Now, of course, use the right way, and I'll get to that here in moments. But to set up a little context here, where is this video coming from? Where is this idea coming from? Well, if you're not familiar on the channel, I have a playlist where I will record myself live trading, and then I'll just post those on the playlist and, the live trading videos. And one of the videos I had, which you can see right here, was talked about how I made, $165 in 3 seconds. And then you can see right there, somebody commented, yeah, but you used $22,000 to make the $166, which is true, which is valid, but it also opens up the door and lets me know, and I see comments like this quite a bit, so I'm not picking on Marcus. Marcus, in fact, you make a valid point. I'm just saying that I see this not all the time, but I see it enough where I just want to now have a video where I can link those people to help explain margin and leverage and how it actually works. So let's set up though what I mean by easy money. Now, I truly am not trying to insult anybody's intelligence, but this is a video designed for beginner day traders, those that are just getting started in the stock market. Because clearly, if you had this sort of philosophy, and especially if I had to link this video to you, that's okay. We're all here to learn. We're here to get better as day traders. So I'm not looking down on you. I'm just saying that I want to set things up for you in the right way so that you can understand margin and leverage and what I mean by easy money and how it literally does make making money easier based on the math. So we have Tom here, and let's just say Tom goes and buys 10 shares. So he goes and buys 10 shares of whatever stock you want to talk about, and then the stock goes in his favor by $1. So how much money does Tom make? Well, again, if he had 10 shares and he made $1 on them, that would be, well, he made $10 in profit, right? Nothing fancy there. Well, let's say this. Let's say that Tom was able to go and buy 100 shares, right? So he bought 100 shares. Same thing there, made $1. Now, all of a sudden, what was his profit? Well, he just made, what? $100, right? He just made $100 on the same exact trade. So my question becomes, well, what was the difference? What allowed, again, same exact trade. The stock, same stock. The stock moved $1. Everything is the same except the one thing. Well, what's the difference? Well, the difference was he bought 100 shares compared to 10 shares. So it all boils down to, all right, well, if Tom is able to buy more shares, it is easier to make more money, right? Do you see where the easy money is coming from? So, of course, I don't mean easy in the sense of I have some sort of like magic stock robot that's going to trade for you. I'm not trying to say that I have some sort of magical system. I mean, Tom still needs to make good decisions. Tom still needs to have a strategy. All those things. Tom needs to manage risk. Tom needs to have a fully functioning, fully operational battle station for you Star Wars fans out there, but a fully operational trading strategy. But within all of that premise, with all that context, well, Tom made more money. How so? Well, he was able to buy more shares, which makes it easier to make more money when you can buy more shares. And that's where leverage and margin comes into play. So the talking point at this point becomes, all right, well, how do you buy more? We've established, okay, yeah, it is easier to make more money when you can buy more shares or buy more contracts or buy more lot size if it's Forex. Whatever you're trading, right, if you can buy more, it's easier to make more money. So how does that actually happen? Well, and this is the cool part here, and I want to use market as the baseline here because I want to focus on one word because that's what introduces what margin actually is. So we'll get to leverage in a second, but what is margin? Well, he says, yeah, but you used, which is true. I did use $22,000. But the question actually is, yeah, but who? Now, who what? Well, whose money did I use? Was that all of my money? And I understand Marcus's point. Well, Clay, yeah, you used $22,000, which is true, but I didn't use all of my money. That was not my personal $22,000. And that's what margin is. Margin is a loan. I used a loan on that transaction. Who was that loan from? Well, that loan was from my broker. So I took a loan, and again, remember that the title of that video was 3 seconds. So quite literally, I took a 3-second loan. The loan lasted for 3 seconds, but I took a loan from my broker, and then I went out there and I made the trade, right? And I traded with that loan. And this right here is what margin actually is. So what I've just described, the loan from your broker to make a trade, that is margin, okay? And in order to do this, in order to get a loan from your broker, you need what is known as a margin account. If you've never signed up for a brokerage, or maybe you have, one of the questions you're going to be asked is, do you want a cash account or a margin account? If you want to be able to take loans from your broker, you need a margin account. So that's just as simple as that. You would just click that box. Now, do you have to take loans? No, you don't have to take loans at all. Now, this brings to the question of, okay, well, Clay, I know that loans, they charge you interest. And the interest rates, now everybody's different for different brokers, so I'm not going to get into what the interest rate would be. But unless you're holding stocks for days upon days upon days, there's no margin that's associated with it. Now, I suppose that could be, maybe some broker has some sort of policy, but let me put it this way, just to keep things extra simple here. If there is any sort of rate that I was charged, interest rate for that 3 seconds, it was pennies on the dollar. The loan amount that it cost me to take that loan was well worth it for making the $165 or whatever it was within 3 seconds. So like I said, there can be some gray territory, but it's not like, oh, wow, it cost you $100 to take that loan, Clay, and $100 for nothing like that. Minimal impact, if any impact at all. So now again, if you're saying, well, I want to use loans to buy stocks and then hold those stocks for weeks and months and maybe years, well, then yeah, there's definitely margin or there are interest rates charged to you because it is actually a loan. So just keep that in mind. How much of a charge? What are all the fees? Well, that's where you're going to want to go and research more so margin requirements and just all those sorts of situations for the particular broker, because all brokers will be different in that sense. So that is a margin account. I was using margin. And that's what using margin means. Another way of saying that is I was just taking a loan from my broker. So whose money was I using? Well, a little bit of my money, which is like anything, right? You got to put a down payment. Put a down payment down, whether you're buying a car or a house. So yes, some of that money I did use of the 22, but it wasn't even close to being all of my money for the 22,000. So that answers the who. Okay, well, I get it. Well, how is this actually working? And this is where leverage comes into play. And leverage is just an amount where whatever you have, it's kind of like gasoline. You pour it on and poof, all of a sudden you can have more money. So my broker that I use offers 4-to-1 leverage. So, and the math is very simple. For every dollar, so here I am right here. And if I have $1, then that means I can go out with four times leverage and now have $4. So the math here is quite simple. Whatever amount of money you have, you just multiply that by the leverage amount. And then that'll give you the total amount. So we'll just run through another little mathematical exercise here so you can see exactly if you're following the math here. But let's just say that I have, so right here, $10. Again, margin is 4, or my leverage is 4. So how much stock could I buy if my account was only $10? Well, if you're saying, well, Clay, you just said you take this number and you multiply it by that number. So if you're saying, I'm pretty sure the answer would be $40. Exactly. That's how leverage works. Leverage amounts vary, again, depending on the broker. And you can have more than that. You can have less than that. In Forex, for example, you can have crazy amounts of leverage. This number right here in Forex can be, a really, really, in fact, in the comment section below, what are some of the crazier leverages you've seen out there offered? I'm curious. I've seen them all over the place, but there can be some very, very crazy leverages out there. And like I said, it depends on the broker. It depends on what sort of financial vehicle you're trading. But at the core, leverage is the same exact thing. How much money do you have? How much money are you using? So again, and that circles back to this. Yes, I was using some of my money, but a very small amount because the rest was coming from the loan. And the loan was being derived from the fact of, well, how much loan can you take? That's really a bigger question is, okay, yeah, I get it. If I have a margin account, my broker will give me a loan, but how big of a loan are they willing to make? And the how big of a loan part is where leverage comes into play. So margin and leverage, they work together, and they just work together in terms of the leverage is essentially answering that question, well, how big of a loan is my broker willing to give me? So when I say you need a loan, you don't have to go out there and fill out some sort of application before you make a trade. Okay, I got to fill out all this paperwork before I make this 3-second trade. Nothing like that. This is all based on the amount of money you put down. And then from there, right away, well, what is your so let me put it this way. Another way you could look at it is if you're trying to figure this stuff out, call up your broker and say, hey, within your margin account, how much leverage do you offer? That's all you have to say is how much leverage you offer, because that's another way of saying, hey, I know you give loans. How big of a loan are you willing to give? But don't say that. Just say, what leverage do you offer? And in my case, like I said, if I were to go to mine, they would say, hey, we offer 4-to-1. So you just go through that math right there. But it's easy. How much money do you have in your account? Multiply that by the leverage amount. And that's how much in margin, terminology, buying power you would have. Really, which is, well, how to buy more? What is my buying power? Well, whatever that leverage is. And to circle this all the way back to the easy money, the more money you can make, once again, I really want to repeat and reiterate this, within a structured system, within a valid strategy. So it becomes easier to make more money within a structured and valid strategy and system when you can, buy more. How do you buy more? You have the ability to take a loan. How do you take a loan? Well, you have a margin account. How big of a loan can you take? How much can you buy? What is your buying power? Well, that's where the leverage will come into play. Now, a huge, huge warning. Now, because you can buy more, that does make money, making it easier. But remember, that's a two-sided coin. It also means that losing money becomes much easier, much quicker to happen. And that is why risk management is vital. If you're new to the channel, or maybe if you're not new to the channel, then you always hear me talking about risk management, risk control. Are you focusing on risk? I get it. It's fun to talk about making money and winning and all this. And that's part of the trading. So I don't have any problem talking about that, but it also needs to, you got to peek around the corner at the other side of that coin, which is you can also lose money. And the more shares you buy of something, the more contracts, the more lot size, it becomes very easy to lose money that way too. And that is why you must manage risk, because if you're not careful, if you don't show this the respect that it deserves, well, this right here, that's your account, right? And I don't mean that in the sense of, oh, your account just exploded from $100 to now it's worth $10,000. No, I mean this in maybe I should have put a toilet right there. Maybe like an explosive toilet, meaning your money is it can disappear just like that if you're not careful. If you don't have, once again, I'm going to repeat it, a structured strategy. That's why I'm really trying to hammer that home. And Clay, stop repeating yourself. I don't care. I want to repeat myself in this regard because that's how important it is. You better be using margin and leverage within the confines and the structure of a valid strategy where you know how to manage risk. But assuming that is true, then yeah, margin is awesome. Leverage is fantastic. Make more, be able to buy more. When you can buy more, you can make easier money. And that's fantastic. So margin, leverage, it's nothing to be scared of. It's nothing to run away from. But I want you to also be aware of it, which brings us full circle back to Marcus. Clearly doesn't understand markets and leverage. No, I did not use $22,000 of my money. Yes, I used some of it, but the rest of it, I just took a loan from my broker that lasted 3 seconds, and then I walked away with $165. So hopefully this helps everybody that, what maybe a little unsure what margin, what leverage is, how it actually works. And, if you are one of these people where I decide I need to link you to this video, like I said, no shame. I get it. We're all new at one point, and that's the idea of the channel, to help you learn, to help you grow as a trader. So now you know that when you're watching those live trade videos of myself, I'm not going to speak for others. I'm assuming they're using leverage in a margin account, but I don't know that for sure. But when you're watching my videos, just realize that, oh, wow, well, so I need to have $22,000 in my account to have been able to do that? No, absolutely not. You don't necessarily need to have whatever amount you saw, because I am taking loans, right? How big of the loans? Well, again, the potential that I have is that leverage, but that is not all my money that I'm using. So just because you use a certain amount doesn't mean that it's actually the trader's own money that is being used. So that is how margin, that is how leverage will help you make more money as a day trader and just make money, making it easier. But again, risk management, because there's always that downside there. If you found this video helpful, a couple quick requests on my part before you go. First off, if you would like me to make more videos like this, very quick, time-efficient way to communicate that to me, just hit that like button. Then second, comments, questions, suggestions. Like I said, curious, what sort of leverage rates have you seen out there? It'd be great if we could get a good list going down below the video, because there's some crazy leverage rates out there, which are very, very explosive in a bad way situations. But leave those down below. And then finally, check out the channel as a whole. There's lots of so for example, I mentioned that live trade video at the beginning. There's an entire playlist of all those where you can go see me take loans, right? So go see me take loans in a bunch of trades there. And there are lots of other videos too. But hopefully you like what you see enough to hit that subscribe button, as I'd love to have it as a subscriber to the channel. But if I've done my job right, you're now walking away understanding what margin is and how leverage works within it. So now you're just a better, well-rounded trader to go out there and use the tools that are available to you. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up, as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.